Retirement is changing in America, and not in the way most people expected. A new survey from BlackRock shows that nearly a quarter of retirement plans, about 24%, are considering alternative assets in the next year. That's a big shift, and it could reshape how millions invest for their future. But is this a good thing or a warning sign? Let's break it down. When people hear alternative assets, they think of investments outside stocks and bonds, private equity, real estate, infrastructure, hedge funds. Plan sponsors believe adding these can make portfolios stronger. Why? Diversification. Spread the risk and you're less exposed to market swings. They can also hedge against inflation and even reduce downside risk. The study suggests this shift could give retirees up to 4 extra years of income. For anyone worried about running out of money, that's huge. But here's the problem. The average American at age 55 has less than $50,000 saved. Think about that. 55 years old, maybe 10 years to go, and only $50,000 put away. It's not enough, and people are living longer. More years in retirement means more expenses, and most households simply aren't prepared. We're also entering the so-called peak 65 moment. Right now, more than 11,000 Americans turn 65 every single day. That's the largest wave of retirements in U.S. history. They're living longer, but savings haven't kept up. It's a challenge and an opportunity. A chance for advisors and institutions to step in with new tools and strategies to help people stretch their savings further. So what if you're in your 50s or 60s and you feel unprepared? First step, talk to a financial professional. Too many people avoid it. They think their questions are silly. But here's the truth. There are no silly questions when it comes to your money. Whether you've just started saving or you're close to retirement and worried it's not enough, a professional can help you understand your risk, set goals, and build a plan that fits your journey. And here's a piece people often overlook: life insurance. September is Life Insurance Awareness Month, and the U.S. still faces a $12 trillion life insurance gap. Most people think of insurance as just a death benefit, but it's more than that. It can build generational wealth. It can protect your family. Think of it as the foundation of a house, the stability everything else rests on. Without it, your financial plan could collapse if something unexpected happens. Here's the bottom line. Retirement planning isn't just about your 401k. It's about diversification, protecting against inflation, planning for longer lives, and yes, using tools like life insurance to build real security. The challenges are big, but the opportunities are bigger if you start early and get guidance. This is Finance Unseen, breaking down the money moves that matter most. If this helped, hit subscribe and share it with someone who needs to hear it. And remember, the best time to start planning was yesterday. The second best time is today.